Bank Nifty, there are some lines that are coming in from the Reserve Bank of India. The RBI will up the ante on NPA recognition. So perhaps the RBI will tighten the screws on as far as a bad asset recognition is concerned. Lata, in fact, has more details for us on that. Lata, can you just explain what exactly you mean by these lines that will flash?
Actually, the big fear gripping the market is ever since the credit policy. Raghuram Rajan stated that he's putting a new date on the table, April 2017, by when he wants bank balance sheets cleaned up, as he called it. Now, this, in the subsequent interview with me, he said we cannot call the end of the NPL cycle. If the world gets even worse, then we don't know about how banks might fare, but we can provide, we can recognize and provide, and that is the process. So what we are picking up, and our correspondent Ritu Singh even filed that story, there is a two-pronged effort. One is that some banks recognize some as NPLs, others don't recognize it. So they are wanting to see whether banks are evergreening and the powers given to them are getting misused, or at least used to not recognize all the NPLs. One of them, of course, is this 525. So tough questions are going to be asked on whether all that have been given that rule deserve it, or whether they should provide for it. As well, those that have been given strategic debt restructuring, which was what Ritu was pointing out, they are given 18 months where they can be recognized as standard, and then a promoter is found. But for these 18 months, they remain in the green as standard loans. So probably they will be asked to do some bit of provisioning, or they be told that at the end of 18 months, they will attract penal provisioning. In some ways, the SDRs rules will be strengthened, so that for 18 months
it doesn't. That's a good thing for the longer run, right?
Oh, absolutely. And that is why I think that April 2017 date is important. That gives you 6 quarters. See, this quarter also is included because the results have not come. It gives 6 quarters for the banks to spread out. I mean, if it is 20%, if stressed loans are 20%, so be it. Over 6 quarters, the 20% will be provided for. But call every NPL an NPL. Call every stressed asset an NPL. Maybe the call. As well, if you remember in the previous credit policy, the rule came in that every time the RBI made an observation in its annual financial supervision about a bank not providing something as NPL, which RBI thought was NPL. Usually what happens is, since the supervision takes 1 year, the bank sets it right, but we never get to know. Now they have to, it's a part of disclosures. So probably because the disclosure will come, banks will be even more careful in ensuring there is no discrepancy between the regulator's definition and their recognition of NPAs. Now, what is happening in the market is the thought that this acceleration is going to hit bank balance sheets as early as starting this January is what is resulting in an accelerated selling, especially in those banks which have exposure to the cyclical sectors. I mean, you don't see so much of a selling, for instance, in HDFC Bank. Maybe a little less even in IndusInd Bank, because they're largely retail guys. But in the rest of the pack, including the hitherto blue-eyed boys of the market, the private banks, you are seeing an accelerated selling, and that's Governor Rajan's statements coming. These are coming from the press conference post the RBI board meeting. They're very fresh from the oven. And these, of course, it's about everything. It depends on what the press is asking questions on. But I'm sure there will be questions on NPLs, and we will get to hear more. But what I'm telling you is just what is in the market's fear. The Reserve Bank statement on the credit policy, and subsequently Ritu's story that SDR issues will also be taken up more severely, and the RBI loath to this discrepancy between one bank saying NPL and another not recognizing NPL.
So from a bank's balance sheet and a stock market